Out of the daily doldrums, we're looking at what opportunities we have here going into the afternoon and then into the end of the day. Now, it's very important to note here what we're going into this week. There's an FOMC statement that's 2 days away. We also have VIX expiration at the end of tomorrow. We have the March contracts that are expiring for the futures contracts for the indices. This is a quarterly expiration. It is also an options expiration. There is a ton of news here as we're going into the week. And one thing that's still going on right now is that the Fed Fund futures are pricing in the cut all the way out into December. And you can see that there's actually not a whole lot of difference between the December and then January, and even January to March, and even March to April. These spreads are very, very tight here. And the markets, as the Fed Fund futures were pulled forward into the future from the June meetings that were going on last week, the markets rallied. And what we're watching for as we move forward into this week, and we're going to make this mental note here of this 40.9 for the December 9th meeting. And if that probability moves out to January, the markets will roll over. And it's going to be interesting to see how that develops. Let's look at the dollar here. And DXY is still in a deep negative correlation over the 30-day period. You can see here that that is backed up by the 15-day. And what we have seen for the dollar's trend here so far is the dollar weakened enough to break through its extension long levels. And what that means here is that there is room to fall back down into the extension long levels that we had previously been inside of and completed profit targets inside of over 2 weeks ago. This dollar strength trade was a lot of the catalyst for the indices weakening from their previous highs. And so after that extension break, there is a traditional short from highs to lows here that could send the dollar down into its extension long level. And inversely, as the dollar is weakening back down into its larger support, the indices rally because of that negative correlation. Now, if we're thinking about this in US dollar terms, you could make a case that Friday's highs to lows is resistance. And so inversely, the indices, Friday's lows to highs, could act as support. We haven't even made that pullback yet into that long setup. And note here that we're looking at the ESN26. This is the new June contract. Have we broken any shorts? No, we haven't broken any shorts in the individual contracts. But what the dollar would suggest right now is that there's room for the indices to keep on squeezing up into larger resistance levels. At least that's what the dollar is suggesting right now. So we're going to have to pay very close attention to that. And the fact is that there's even more aggressive bullish setups here without us even making a pullback. But I want to talk about that in relation to the US dollar first. What about the bank trend? What is bank suggesting to us right now? Well, bank is it's still inside of resistance. But here's what is important to kind of pay attention to. We didn't run back up into Friday's highs, did we? This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.